Clients come to St. Clair because literally every state has their own set of Nexus rules. And Nexus rules are different depending on the type of tax you're talking about. So talking about income tax, if it's corporate income tax, there's a separate set of rules that tell me when I'm subject to a certain state's income tax. With sales tax, there's also a different set of rules, which says I don't even need to have physical presence in a state and I can become subject to sales tax in a particular state. So rather than a client have to worry about all 50 states and multiple local jurisdictions, St. Clair is constantly learning and staying up to date on every state's situation and how they measure nexus for each particular industry. A lot of businesses operate in a single jurisdiction, whether they open up a retail shop on Main Street or they hang their shingle up and perform services out of an office in one location. It's a pretty simple proposition. You file taxes in one jurisdiction, maybe a state return and a local return. When multi-jurisdiction issues become important are when you start to send employees into other towns or you open up another office in a different town, or more recently, you start to ship goods into other jurisdictions. In the past, the old school way was that you needed physical presence in a state or a local township in order to have what they call nexus in that township. Nexus creates the need to file a tax return. Nowadays, there have been some court cases recently which have established economic nexus for certain states. What that means is we're no longer reliant on physical presence. I don't need to have an employee in a state to be subject to their taxes. So it becomes a little more of a tricky situation for businesses to know where exactly they are subject to taxation. Well, the biggest question that we get here at St. Clair regarding Nexus is when a client gets a Nexus questionnaire from a state. A lot of times states will get wind of our client's name some way or another, whether they're dealing with a vendor who is located in a particular state or some other reason. We'll get a call from a client asking, what do I do with this Nexus questionnaire? The questionnaire can be pretty lengthy and intimidating, often exceeding 8 to 10 pages. On there are questions about every level of activity that you may have within a state. Answering these questionnaires are critical as they begin the process of a state adding you or your business to their tax roll. Once that happens, you have a filing obligation until the business ceases operations in that state. What we recommend is that the client work with us in filling out the Nexus questionnaire, and we use our expertise and our knowledge of the different states' Nexus requirements to assist them in filling it out honestly, but also in the best possible interest of our client to provide as little exposure to other states as possible. Some of the nexus or jurisdictional issues that you will run into is whether or not I am subject to a certain state's taxes based on certain situations that I may have. As I stated earlier, having a telecommuting employee in a different state, while may seem innocuous, can create nexus within a state and therefore create a filing obligation in that state. A lot of states nowadays have minimum taxes. So although you may have to just file a return with no information on it, there may be a minimum tax that you could be responsible for. Telecommuting is considered having a presence in certain states and therefore creating a filing requirement in those states. So we need to be careful in light of the current situation where a lot of our employees and sometimes subcontractors are working in other jurisdictions, even though they're doing telecommuting. What do I do now that I have a telecommuting employee in another state? Am I subject to withholding tax? Am I subject to sales taxes? Am I subject to income taxes? We can help you answer those questions based on every different situation you may encounter, whether it's with telecommuting employees or shipping goods using common carrier into another state. All of these circumstances affect the different taxes in different ways, whether it's income taxes, sales taxes, local business taxes. These are all subject to different Nexus rules, and we here at St. Clair can help you navigate through those rules to the best possible outcome so that you can sleep at night knowing that all your tax obligations are being met. Pennsylvania is unique in that we have multiple local jurisdictions. A lot of those jurisdictions have their own earned income tax as well as a business privilege tax. Problems can arise if I do business in multiple local jurisdictions. We at St. Clair see that a lot with construction contractors who may go into a local jurisdiction temporarily to do a job. So the question becomes, do I need to file a tax return in that local jurisdiction for the 2 weeks that I was there doing that job? So we at St. Clair stay up to date on all those local issues and filing requirements so that we can best assist you, whether you've filed in certain states or not. If you feel like you have a filing obligation, we are happy to meet with you, assess the obligations, and give you the best possible advice going forward so that you can focus on your business and we can focus on what we do best. The biggest issue is if you don't file a tax return that you were required to file, there is no statute of limitations. This means that a local or state government can come after you for over 10 years worth of delinquent tax returns. We would try to avoid that by filing tax returns as soon as we knew about the requirement to do so. Even though a taxpayer may not know about their Nexus requirements in a state, that does not excuse them from a filing requirement. Our firm can help get in touch with the state under a voluntary compliance technique, which helps to mitigate penalties and interest for the client. The alternative is to be contacted randomly by a state and have to comply. As I said before, that could mean having to file over 10 years of delinquent tax returns, including penalties and interest. St. Clair's team is qualified to handle this type of work because we have about 15 tax professionals who are all CPAs who deal with these issues year-round. The average level of experience is about 25 years within the tax department. Our experts deal with a multitude of issues, ranging from state and local Nexus issues to tax collection expertise, offers in compromise, estate and trust planning, and a myriad of other issues.